Hey, it's Mac with PriceActionTradingSystem.com, and today is Tuesday, I believe. Yep, Tuesday, August the 20th. This will be our chart lesson for today. In the big scheme of it, I think there's a bigger channel working up. Looks like we're finally getting a little break of it here in the afternoon. But pretty much all day we've stayed within this bigger channel. There was a trend working down, then there was a trend that worked up to the other side, and then I'm sure you can find a trend working down here too. Um, but I was done by this time right in here, so I went ahead and marked this trade right here because this one might be tricky. But once you got into this, it wasn't hardly worth messing with until you've got a failed break higher, and then you might have wanted to short that. But you should have been thinking, hey, we're probably coming back down. We've touched the upper side, so we're probably coming to the lower side, and that's generally what happens. We touch the upper side, we come to the lower side. We touch the lower side, we go to the upper side, and that's what you look for. You don't always get an instant reversal, but that's why we draw our trend lines and follow the rules of a break and then run to a new high. And then we're coming down here, and let's just look at it real quick. Um, you may have a trend right there. Let's just look and see how prices fit. They don't fit real good there. Let's look at it a little differently. They fit okay there, but they've overshot that a little bit. But that's not uncommon either. And so what you may have is a little spike in channel right here, and then we broke the trend line. We're moving to a new low. You just have to kind of play with those. But generally when you get a overshoot of one side, you get one on the other, so it wouldn't surprise me here that we got kind of an equal overshoot, so it wouldn't surprise me if we rally out of there. We just have to see what happens. But let's go talk about the trades. You've got a failed second entry long here that reversed down. We're looking for prices to probably come back down anyway. This looked a little like a trading range here, but you can see we're making higher lows all the way up here. That's a good sign that we're going to go higher. But you had to kind of pay attention to this just in case. And there was a failed second entry short right here real early this morning if you were here. I'm not sure if it would have worked or not. But it's a little dangerous going long this far away from the EMA this high. Let me just look and see if it would have worked. If you entered, it would have been 49, and it wouldn't have unless you used a limit order. 48.50. Yep. If you use a limit order one tick in, which when you get that little stem there, that's generally when I decide to use a limit order. Looks like it would have gotten filled and you would have got your scalp, but that's really early this morning. I don't know how many of you would have been trading then, but you're moving down. You got one nice leg down, then you got a little two-legged correction with a trap, and then you get your other leg down, so a nice short right there. This one was a little bit, because those are two up-down bars, but that's really bearish off the EMA. There wasn't a break of this yet. We're not down here to this line, and there's enough room if you use a limit order, and then also there's a possibility that this is a trading range, so you could be coming all the way down to here. Let's just go ahead and put that line on there so it's a little easier to see. You can see that. But again, because there's a lot of overlap, I would say use a limit order a tick or so, and you could have got filled even two ticks back into this, but then easy scalp. Even if you used a stop there, I think it would have worked. Your stop entry would have been 44.75. Yep, and it would have worked. You had a couple of ticks to spare. So either way you enter that one, good trade. And then you get a failed second entry short. Here, we did break below this line, but generally you got to figure there's going to at least be a retest there. And notice this one, we got a break and a chance for a new low. So this is a little aggressive. There's a double bottom there. There's a higher double bottom than here. But you had to be, hopefully you saw this trend line working up through here and saw this possible channel. And you could have had this already here before you got up here. And you definitely could have had it here and bring it back down, and you would have seen it was fitting there. And then we're trying to bounce off that. It was a little bit tempting to go long there, but there hadn't been a break yet. So I was, assuming that we'll probably get a push back down, which we did. You just never know if it's going to get below that trend line or not, but there's just too much overlap there. It's not a really good entry. But when you get the failed second entry short, and actually I don't even know if that really failed. Let's just look. Entry would have been 44.25. Yeah, it was a 4-tick failure. So it's aggressive, but it's a double bottom. You got your break, a push to a new low. It didn't quite make a new low, but you tried it twice right there. You can see there's two kind of up-down bars. So if you took that one, nice trade, easy scalp, nothing much more than that. And depending on how you entered this, you might have got a runner. Somebody sent me an email asking if I caught that and caught the runner. You had to ride out the pullback first, and then you might have gotten the runner. Or if you entered with a limit order, which I would recommend here, you would have probably gotten a runner on this. So, but that would be the only way, because it did come back and test the top of this bar. So, if you got a runner there, you could have ridden this all the way to the top today. Good job if you did. But then you had your failed second entry short here. Notice the new low. You can count this double bottom either way. I get that question a lot. But generally I start the count over because it's just an equal low. First entry short, second entry short. It fails, it turns up. Easy scalp. They come back and get any break-even runners depending on how you manage this. But guess what? If you entered here, and that's just a test of that line again, and when it bounces right there, you got to go long right there, especially with that little trout blow. I really was hoping that would break above on this bar. It didn't break higher till here. But if you weren't quick with this one, any limit orders wouldn't have got filled. I tried to get a limit order filled, and I had to chase this one a tick or so. I think I ended up getting filled at a regular stop. Easy move up. Again, it's a failed second entry short, but the big thing is just to bounce off this trend line. And easy move up, and then guess what? You get a failed second entry short there. Any runners were safe here. You can add on or make a new order here, and boom, we go higher. And then you get two legs back. And let me show you this. Even though there's a failed second entry long there, you got to be careful going short here because we haven't got to the upper side of the main channel. But notice this, there's one leg, that's really one leg there, and then a little correction, and then a second leg. So it's really a two-legged move and then a reversal. It didn't quite get back to the trend line the way I had it drawn, but I'm guessing it's probably a little further over than I originally had it drawn. And you can see that, that's a perfect bounce, and then we come back and retest it, another bounce. I didn't like going long there because you got to go long at the very high, and you're almost back to the other side of the channel. If you entered here, that was okay because it was a bounce right off of that. And I would have used the limit order here, which I did, because it didn't close on the high, and there's a little bit of overlap there. But it's a little failed break lower, and you really could have entered a stop there if you wanted to, and it would have worked as long as you kept your stop below the signal bar. And I get that question a lot too. If you try to tighten your stop too early, you're going to get stopped out on good trades. Keep your stop below the signal bar, which is right here. It's right here on this trade. It's right here on this trade. It's always the lowest bar in that move. And then right here, if you entered here, this is a breakout pullback long. I didn't like it. I thought it was better to wait. Again, we were getting really high here, but we were coming off the line, the EMA, and we really tried to go short twice. So it's like a breakout pullback long second entry. It's a little risky because of the high, but you can see, you got to be figuring, hey, we're probably going up here. I probably should have drawn this one in green. I think I'll change it because for the same reason I went long. I didn't like going long here. I did go long here, so it's not much difference other than you've gotten more confirmation of that trend line now because look, we're closing. You can see it's holding, and then boom, off we go up. Turned out to be a great trade. And then you've got a failed second entry long here. It's coming off the high side, but you can't be going short because it could have easily bounced right there and gone higher. You got your actually three little pushes down, so three little legs down, and then a reversal. I like this one because that was the first real break of this trend line for a long time up through here. We ran to a new high. I wasn't sure we'd make a new high, but I figured we'd at least come back and test the trend line, and there's a lot of room there. And then you might have even thought about going long here, but now you got a lower low, a retest. So I drew this in orange just because I wanted to point it out. If you did happen to go long, notice by the time this bar closed, you got 3 bars overlapping. You got a doji. Not really a good place to be going long, but if you waited, you got a second entry long here. So let's say, hey, you went long above that bar. When it ended as a doji and you got another one there, I would have exited, and especially if it starts turning down there and then comes back up and closes on a doji again, you had multiple chances to get out of this with maybe a tick, EV, several chances at break even, and then even if you didn't get out there, you probably would have got stopped out because there's your signal bar, and it went. Guess what? It goes one tick lower and then it runs higher, and all they're doing is running stops back and forth. And by this time, you just want to stay out. There's no sense in trading that. You might have considered entering here on this little second entry coming off that high. And notice it's a move down, a little pullback, and then a second. And, you're looking really for prices to come down here. They're just really struggling. There's just too much buying. It takes a while to work through all that. But that's why I wanted to draw that in orange. It's really... it's really tempting to want to try to take that trade. So if you did, that's how I would look to manage it. And, when prices close like this and then another bar like this, just get out. Don't take any chances. Wait for another entry. And if it goes without you, so what? It goes without you. But you're better off to get a break even or a tick or so, or maybe even lose a tick than to take a hit. And the only one of these trades that didn't run the stop was this one right here. They couldn't run the stop on that one, and you can see that there's a low on that. We got close, but they bounced it beforehand, and they ran the stops on the other side and then bring it down. And they sucked a lot of longs in right there. They got all the shorts to exit. All these guys were trying to get short, looking for prices to come to here, and then they burned them right here on the stops, and then it goes right where all those people thought. And that's what they try to do. They trick you. So when you're looking for these traps, think about what they're trying to do. Think about, the odds are we're coming off the high side, so we're going to the low side. So they're going to try to trick enough longs probably to get it to go down. So be careful about going long anymore, especially after this big trend line right here and the break and the new high. That's a sure sign of reversals coming, and it's coming off this upper side. So, hey, we're probably headed here at a minimum. So you got to keep that in mind. So, and once you start to see all these reversals back and forth, just stay out. Don't even get in it. The only way you can trade that, following our rules, is to wait on a failed break or a little bitty doji at the low or a little doji at the high. That's the only way to trade that. And you see, let's just see, if you entered on this one, 53.75, and you can see it would have worked. And where was the other one? There was a little one off the high somewhere. Oh, here's the little one off the high. Entry would have been 54.25, and you see it got just enough to work. That's the only way you can enter those. You can't, if you wait till it gets in the middle, you don't have room to get out, and it bounces on you. It may run the stops and go far enough to run the stops, but then it reverses real quick on you. So you got to be careful. Just stay out of this stuff. If you get in it, you're probably going to lose money unless you do it the way I'd said. And if there's not much room there, you're really being risky even entering on those. But that's the only way to enter those trades. Draw your lines, and if you put the lines on there, it's a lot easier to see it. And you can see now, and then you can see this little failed break and the chance, and then it's going to go lower. And so hopefully that makes sense to you and makes it easier to see across there. You can see all of that, and maybe the highs are actually right there, but we couldn't even get back because this line's holding. So draw your lines, because I really think it makes it a whole lot easier to see that stuff. It does. I know it does to me. A picture's, a whole lot more valuable than just looking at it like that. But keep that in mind. Once you see it get all this overlap, inevitably I'll probably get 4 or 5 emails about trades in here wanting to know why they failed. Well, it's because look how flat it's just a trading range. Look how flat the EMA is. Prices are back and forth on each side. That's what trading ranges do. They just reverse and reverse and reverse and reverse until finally one side traps out and wins out, and it goes the other way. And this is no different than a 10-point trading range. They all work the same. It's just much tighter. The market's in equilibrium right there. There's not enough selling, but there's not enough buying to continue to take it higher. And then they'll keep going until they get one side loaded up, and they'll trap them all out and reverse it. And that's what they were loading up the shorts. Most of the people were looking for prices to come to the other side, and then they ran it up and got their stops, and then they just quit buying, and the bottom falls out of it, and it goes right where all these shorts thought it was going to go. But they don't get to go with it unless they add back on. And most of them probably took a loss, and most of them were probably short, and so then they either reversed here or took a loss, and those that reversed got a double ding because now it's going right where they thought it was going to go. And so just remember that the idea, and when it's trending up, the idea is to try to trap you into the short side. And you can see they did that over and over up through here. They trapped everybody out here. They trapped a bunch of longs out here. They trapped some more out here, and they trapped shorts in. You know, they're trapping shorts in and trapping longs out by running the stops, because people, these people think they're going to outsmart it. They're tightening their stops, and they're getting them too tight, and they don't have room, and they get stopped out only to see it go right where they thought it was going to go. But most of the people are probably buying all of these moves right at the highs, and then they realize they're on the wrong side, and they exit, and then boom, it goes right where they think, and they buy in here, and they get stuck, and then it starts turning down, and they usually reverse and sell, and then it goes straight back up, and then they try to buy again when it gets up here, and then it starts going down, and then they reverse or sell, and then boom, it's what the market does over and over. The smart guys are buying these lows. Every time it comes back to the EMA and the trend line, and the weak players and the smart guys are selling at all these high points where the weak guys are coming in and buying, and they just provide them liquidity to get right out. And so you got to pay attention to these lines. We're looking to enter on these major lines, this major support and resistance. That's where it all happens. And most people know this is support and this is resistance. But this trend line right here and this trend channel line that I call it are both the same thing. This is support and this is resistance. And you don't trade a trend you don't counter trend trade a trend like that. Look at that thing. Look at that EMA. It's straight up. Everything's above the EMA, basically starting right in here, and we can't even get back to the EMA. So you don't short those moves, because if you do, you're going to get burned. You wait till you get. This is a reversal pattern. Notice we tried to go higher. We kind of got a resistance there. Now we make a lower low. We break the trend line. We run up to a new high. That's a reversal pattern. So now you're looking for prices to come back down here. And all they did, though, was fool people. They got people loaded up on most all these shorts got short down here at this low part of this range. And they put their stops up here. And guess what? That's exactly where they go. They get the stops, and all that selling starts. And then they all realize, the smart traders are all selling up here, and they sell it. And once it starts getting momentum, the weak traders start loading up in again down here and selling, and next thing you know, it's bouncing on them again, and it's just a cycle over and over. So hope that makes sense to you. But one other thing, I've gotten a couple of questions today about my bid and ask lines. They don't really do anything special. They just help you see where the bid and the ask price is. And the ES during the regular hours, they're always going to be one tick apart, so it doesn't really help you. But if you go to some markets, like some of the currency futures or things like that, there may be a 2-tick spread. And so then it helps you to see that, because prices aren't just going up and down. You can't really see that real good on a chart without those lines. And so that's why I have those lines. And you can't really see the lower line or the bid line, because this price line covers it up. And I like to have this price line. That just shows where prices are trading at, because it makes it easier to see if we've broken below previous support over here, if we're going up, if we've broken above previous resistance over here. I mean, those are important things. So that's why I like to have that line. That one does serve a pretty good purpose. But for the ES, this little bid and ask line, and I wish you could see you still can't see it. You can only see it if prices are moving and the market's closed right now. So anyway, I like to have those lines on there, and like I said, this little bid and ask line here, it's not really critical. I can't even, I don't even hardly notice it anymore, but I do use that price line that runs across there because it shows me how prices. See, if you look here, you can't really tell exactly where that is in relation to this support area over here, but with that line running across there, you can see exactly where it's ticking through there. So that's why I like it. I had this on there from when I used to trade other markets when there would be a sometimes there's a 2-tick spread, and this helps you to see that, so if you're not careful where you buy, if you buy with a stop, you're going to get the worst feel, so you'll get 2 ticks off what you think you're going to get. So it's kind of helpful to know if there's a 2-tick spread or a 1-tick spread. So and that's one other thing. You notice they recently did an update on NinjaTrader. I always wait a week or so because a lot of times there's a bug, something crazy in the update. So I usually wait a few days before I update. So I haven't updated yet, so I'll probably do that later today or tomorrow sometime when trading's over. But I usually wait 4, 5, 6, 7 days just to make sure there's no bugs in there, because sometimes there's a bug in there that they don't catch, and then you got issues from upgrading or whatever. So but anyway, I'm going to wrap it up. Hope you had a good trading day. We'll be back to do this tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.